In his annual letter to shareholders, Warren Buffett discussed several topics, including the country's growing fiscal issues. He gave advice to the Trump administration, and he looked back on his 60 years at Berkshire Hathaway. Joining us right now to break down the letter is McCrae Sykes. He's Gabelli Fund's portfolio manager. And, Mac, let's talk through maybe the results first, because they also released their quarterly earnings at the same time. There have been a lot of notes out on Wall Street this morning on it. Most of them point to the strong underwriting performance of the insurance companies, strong profits overall, and then UBS is actually raising its estimates and its price target on the B shares to $557 from $536. What are your thoughts just about the performance of the company?
Right. It was actually a pretty good earnings release. So there's 1.44 million of the A equivalent, trading over 720,000. So it's a $1 trillion company, as you know. Last year, the insurance between the income and the underwriting increased about $8 billion year over year. So that boosted results to $47 billion of operating earnings. You combine that with investment gains, book value rose $88 billion to $650 billion. Imagine these numbers. So that's 16%. It's pretty remarkable for a company of that size. And so on the operating side, doing well, obviously, with the investments, and then they're sitting on the cash. So the one thing that I think disappoints investors, but really shouldn't, is the buybacks, and he hasn't bought back stock since May. The last level there, about 627,000 per A share. So that's down 10% from the current price. So that's something to look forward to in the future as he puts the cash to work.
Okay, that cash, let's talk about it. $325 billion. Yeah. It's the largest cash pile that any company, any public company in history has ever had. It's greater than if you even add up today's numbers from Apple, Microsoft, and Alphabet, and they all have some pretty big cash hoards. Right. What do you think the plan is behind that? Why do you think he's doing it?
So I think there was a couple of idiosyncratic components to it. He's wound down a lot of the Apple position, Bank of America. So that's, those were two things, contributing to that cash. Plus, last year they generated $30 billion of operating cash flow, which was about $600 million per week that would end up on his desk to be allocated. So this is still a very strong cash-producing enterprise. But this is all a good thing. I think people do get impatient in the short term. And, if you go back to a few of his letters a few years ago, he talks about, really rare opportunities coming around, every 5, 10 years. And so, look, we just have to have faith in the system. It's worked over those 60 years. And he has some great managers below him that'll keep that doctrine. And so this is a good problem to have. And, if we look back at 08, 09, there was a time when they really accelerated capital. They went into Dow, Goldman Sachs, Mars, et cetera, and they actually reduced their cash balance below that 20 billion threshold. So there was a time when they put capital to work, and it certainly measured,
So basically, he's looking around thinking that prices are pretty expensive, including his own stock, which he's not buying back either.
Yeah, so it's trading at 1.5 times tangible book value. So, clearly it's a level, it's kind of the higher, but down 10% is not unrealistic in this market, which has been pretty volatile, as you know. And look, there could be other events that we don't know and have shown up in history. So I think he's well situated to take advantage of that.
One of the things that he pointed out in his annual letter was just this idea that Berkshire Hathaway paid 5% of all total corporate taxes last year. That's kind of an astounding number.
Right. That's a testament to what he's built and his team and all of the asset allocation over the years. And I think he's proud to be able to contribute to the corporate. And he's talked, in past letters about corporate responsibility for our overall budget of the U.S. and contributing that and, making sure there's opportunity for other people as well. So I think that's just a testament to the progress that the firm has made.
I guess the message he had to Washington was spend it wisely and make sure you protect the strong dollar, too.
Right. So he kind of snuck in some of his own, I would say, political views and fiscal views. And, he does that very delicately and responsibly. And I think it's well heard by the world.
Yeah. What other takeaways did you have from the letter itself?
Well, what's great about this big hoard of cash, it's just advertising. Everybody's debating it, but there's a lot of private companies out there, and I think the Forest River anecdote that he brought up about this owner-operator having done really well in the business, adopted this entrepreneurial philosophy in terms of his salary relative to Warren's and how that business has done very well, and that's a sign to, hey, Berkshire has the capital, they have the doctrine to do all that stuff and execute for you and also do well with the stock price as well.
You mentioned some of the management. He did say that it's not going to be long before Greg Abel is the CEO and is writing the shareholders letter for the company.
Right, and you know, he talked about his health there a little bit too, and as a reminder of kind of the physical limitations as well. But again, Greg Abel just, you know, he brings that presence, he brings that entrepreneurial thinking, and I think could ultimately be a better potential operator than Warren in some ways in terms of commanding the discipline and the accountability from the subsidiaries.